Hi guys, welcome to another video. Today I'm going to be discussing market timing and whether you should or should not do it. The answer right now is you shouldn't. It's very tempting. That's the whole purpose of this video, the whole reason. I saw yesterday, I'm sure most of you saw that, there was a massive pop-up in the markets at the open. The S&P was up over 3% at the open. And that to me was a sign of, right, I'd love to sell it. I'd love to take the small position I have in a equity fund, a whole world equity fund, and just sell out because I think this is at least a short-term market top. Now, if I'd done that, I would have made some money. The market has fallen since then, slightly. You can see here just how crazy, actually, November itself has been. The Dow Jones is up 10% on the month. The S&P is up 8.6%, and the Nasdaq is up 6%. Now that's crazy. That's all been driven, this week mostly by Pfizer and the news of their vaccine working, 90% effective. Now, for me, that whole situation is overblown, hence why I thought yesterday was the really top of the market. I'll explain that reasoning quickly. So the drug being manufactured by Pfizer is one of the two that are used doing the new method, the RNA method. And that's the first way a drug has been done that way, I believe. And that requires 2 doses, 3 weeks apart, and it has to be kept at minus 70 degrees. Now, that's not particularly viable when you're thinking of the kind of rollout we've got to have. This drug, just like they've had to be creative with testing, they're going to have to be creative in how they distribute a vaccine as well. And that doesn't lend itself very well if it needs those kind of conditions, certainly not in the emerging world. And that vaccine is needed everywhere, not just in developed countries that could probably deal with these conditions. Also, that means double the doses you need. So each person needs 2. That's more production. They reckon they'll have 50 million doses by the end of the year. So that's 25 million people that could be vaccinated. Now, lots of different countries are going to be up for that. They're going to try and bid their way to it, outbid. We'll see how that goes. But really, for me, this isn't the bullish sign that the market took it as. Now, that's just my opinion. I could be completely wrong. But because this is one of the other vaccines being developed in a new way, from my point of view, it doesn't necessarily suggest that all the other ones are going to be successful too. I think that's where the market's come from. This one's not particularly usable, but the other ones could be more so, and this is a positive sign that we're going to get more vaccines, different vaccines. The more we have, the better. I don't see that from this bit of news. I see that maybe the 2 RNA ones could be successful, but the other ones doesn't necessarily affect them because it's a new way of producing the medicines, a new way of producing the vaccines. That's just my 2 pennyworth on it. Obviously, that's just my opinion. I am by no means a scientist, very little knowledge at all, but that's just how I've read it, how I've read the situation. Obviously, as an investor, you do have to take opinions on these things because they're pivotal to the market, as you saw yesterday. But yeah, obviously the rest of the rally in November has been on the election, on the Biden win, and the probability of a divided Senate. So for me, this is where I look at it and I go, yesterday I want to sell. Because I saw that, if you look here on the S&P, I saw that peak here. We see that crazy bounce up, back up to 3,640. And I thought, you know what, that's not sustainable. It's reacted too much to this news. And in fact, that is what's happened. The S&P and the Nasdaq have fallen a lot since that news, in part because of massively increasing cases, more hospitalizations, etc., both in the US and elsewhere. And I think, that gamble would have paid off in this particular example where I could have sold here, put a short position on maybe, and, immediately captured a move here. It's down about 100 points here, and that's not insignificant, but also, that's a lot of risk to take on. And it was the right decision not to do it. But those are the kind of things where I think you need to, look at, for my opinion, but then I also gut check myself and said, is that a good use of the money? Is that a logical use of the money? And is that what I want to do? Do I want to be picking tops and bottoms? And no, I don't, because it's dangerous. You will get it wrong. You might be right a few times. I did, in all fairness, try to pick the bottom earlier in the year. And to be honest, that was relatively successful. But I know that's not the right way to do it. I know that's not a very long-term way of doing things. So that's why I avoided it this time. Yes, I could have captured some upside, but I also could have caught a lot of downside. This year has been crazy for markets. It could have gone either way. Now, the whole reason the S&P and Nasdaq are falling is because this is seen as bearish for certain tech stocks. Some of them were down massively yesterday. I think it was like Zoom down 8%. And then you've got the opposite, where you had a lot of really big companies, really companies that are dependent on there being a reopening, got up massively. So IAG, British Airways, gained 40% yesterday. Cineworld, massive gain as well, over, I think, around 50%. I mean, it was crazy. Now, that to me is a massive overreaction to this vaccine news. And I think you saw that when there was some tempering for some politicians, a little bit more patience involved. I think the markets might come down from here, to be honest, for a little bit at least. But equally, that's not necessarily true. I mean, this chart of the FTSE, you've got the pop that the FTSE had on that news. Same news as the US markets yesterday. And it's still up. And it's up today. It hasn't declined. So, unlike the US markets, or most of them, it hasn't retraced at all. It's just kept popping up. So if I put a short on here, it would have been very bad. Which is why, again, you don't try and time the market. Focus on the individual stocks from my point of view. I think that's better. And go from there, really. Now, obviously, again, I'm not sure how sustainable this increase really is. If you look here, this is a 3-month chart for the FTSE 100, and we've gone so quickly back up above the level 3 months ago. If you look at 6 month, we are really approaching the levels we saw in June. We're about here, mid-June, mid to late June, I should say. Obviously, we're not near this point yet. The peak we had in early June. But if you look at the year to date, we're still quite far down from where the market was before the start of the coronavirus pandemic. And that's why this could be a dangerous place to call a top, because there's a lot more upside left if markets see that possibility. If you think this is a cure, the be all and end all, you don't need another one. And some people are interpreting it that way. Again, that was just my opinion. But yeah, so there could be a lot more upside in this. Now, obviously, the aggressiveness of the rally doesn't necessarily lend itself to it being completely supported. But yeah, I mean, from this, all I really wanted to say was it is tempting to time the market. It's fun to time the market, but it's a little irresponsible. You're gonna occasionally win money, probably you're gonna occasionally lose money. I think if you're timing the market, if you're coming in with that mindset on a short-term, long-term basis, you need to be thinking about it in a gambling sense, which I'm not saying is a good or bad thing, but timing the market in that way is not necessarily investing. You're gambling on directions. It's a little bit different if you're buying an individual stock. You believe it's going to appreciate and you're happy to hold it in the meantime. Obviously, you've got a directional bias. You want it to go up or down if it's shorting. But you're not as concerned with the short-term moves. If I'd put that short on yesterday around midday, I'd have been pretty upset at this point because the market's up so much more in the UK anyway. In the US, it would have gone well. But that's the thing, you've got to understand how different markets interpret different information, why the FTSE is up so much and the US has declined. Now, Now, partly I think that's down to the fact that there's a lot more tech focus in the S&P and the NASDAQ. You can see here the reduction in the Dow Jones hasn't been as severe. It's been a little bit, but that pop there on that news was massive. And, you know, obviously it was big in the FTSE as well. Just we go back to a 5-day, it was arguably just as big in the FTSE, but we've maintained that. I think the UK market closed up 5% yesterday, so it's just mental. But yeah, that's what I wanted to say in this video. Don't time the market, or if you do, don't consider investing. Look at it from a gambling point of view, and just be aware of it. Use small sums of money or money you're willing to lose, and have fun with it that way. Don't treat it as investing per se, from my point of view. But as usual, guys, this is just my opinion. I'm not a financial advisor. Please don't take this as financial advice. Do your own research and form your own opinions before investing. But yeah, thank you very much.